Hi, this is Nilus Mattive for Money and Markets TV. Probably the most important question that I'm often asked is how can investors continue to participate in this crazy market without getting ruined by all the massive price swings? I think the truth of the matter is that quick and violent about-faces have just become the norm in these turbulent times. So for anyone trying to actively trade these markets, or even simply put some new money to work, that can prove exasperating. However, I would like to remind you that you don't have to cash in your chips and go home or fail to invest money you might be setting aside. Nor do you need perfect timing. Instead, you can let dollar cost averaging work to your advantage. In case you've missed my past columns on this approach, let me explain it once more. The idea with dollar cost averaging is relatively simple. You buy equal dollar amounts of the same investment on a predetermined schedule. The logic behind this approach is that buying equal dollar amounts over time allows you to reduce your risk to a stock's short-term price movement. This automatically encourages you to buy more when prices are lower and less when prices are higher. It also removes much of the emotion from the investing process. You've already committed to buying the stock at regular intervals, regardless of market conditions. And because you're doing this automatically, it doesn't require more than a few minutes of your time. While I've previously made plenty of compelling arguments in favor of using dollar cost averaging for stocks, through retirement plans, and even with broad stock index funds, I've never really pointed out that you can also use it with just about any other type of investment these days. You see, dollar cost averaging can be done with practically any exchange-traded fund out there. And as many of my colleagues have regularly pointed out, ETFs now cover gold, silver, oil, and various flavors of bonds. This is especially important now because it's not just stocks that have been experiencing wild price swings. In other words, my goal with all these dollar cost averaging endorsements is not to convince you that you must invest in stocks no matter what. Instead, it's to show you a way of methodically buying whatever particular investment you believe will rise over the long term. So please, if all the choppy action in the markets has been discouraging you from sticking with your big picture investing plans, consider getting back in the game bit by bit with this oft-ignored but extremely powerful strategy. I'm Nilus Mattive from Money and Markets TV. Thanks for watching.